Good morning, everyone. Welcome back to the Stock Market Podcast from MPIinvest.com. Well, coming to the market yesterday, the first thing that I need to tell you is, of course, what a bull rally. Amazing rally throughout the day, in spite of being an expiry right from the start. If you see right from the start, in spite of the weakness in US market, we could see the Indian market just rallying throughout the day. And we could even see the market actually closing about 18,250. 18,250. I think when was the last time we touched 18,250 in January? And if you see, the best part was, if you see from mid of Feb, we were around 18,200 levels, and from there it has fallen. So it took about 45 days to fall to the low of 16,800, and from there, in just about 30 days, we have not only recovered but also we are up higher than what from where we fell in Feb mid. So it was an amazing rally. I would say the last 30 days was amazing for stock market. Of course, no other reason. Of course, the corporate results which came were of course good, but then the major reason for the Indian stock market to rise is the FII buying. That continues. In fact, yesterday also they bought for 1,400 crores. And the interesting thing is, when FIIs are buying for 1,400 crores, the DIIs also continue to buy for almost 400 crores. So naturally, with such big buying, how can the market stop? So that's exactly what happened yesterday. We could see the market going up and up. In fact, the second half of the day, I thought there might be some sell-off, but then second half there was a result that came in from HDFC, and HDFC, came with better than expected results, and of course good results. And we could see HDFC also zooming in up, it closed up by almost 2% yesterday. So naturally, the big power came in yesterday from HDFC Twins, then also Reliance. And the best part was both HDFC Twins have come, almost HDFC Bank has already hit a brand new high, and HDFC is also close to 52-week high. So overall, the HDFC Twins are doing amazing. And if you remember, I'm sure if you're part of MPA family, you should be having HDFC Twins in good numbers. And we are invested into HDFC Twins for quite some time. So I'm sure all of you would be sitting with some amazing profit. If you are one of them who are sitting with a good profit in HDFC, do comment below. I would like to see that. So apart from that, if you look at the next important thing in the market yesterday, the market also saw some important results coming in. Of course, not affecting the Nifty much, but of course they are very important to understand because the TVS Motors and Hero Motor results have come yesterday. Both of them have come out well. In fact, TVS, as expected, has done really well, and TVS is yet another stock in our portfolio. So I'm sure that will also see some good movement in some time. So one thing that can be implied from good two-wheeler sales is that rural market is picking up. So if you remember, to start off this summer, it was told that the summer is going to be really hot and the rains are not going to be great, and this could actually affect the agriculture. So if you know, for India, agriculture contributes a good portion to GDP, and rural India also depends a lot on agriculture. So rural Indian market growing is something very important for not only automobile sector but also the FMCG sector, because FMCG and auto has a very good exposure in the rural sector. And the important part is, especially the two-wheeler section, more than the cars, have a very good impact. So if you see untimely rain, so of course recently there have been some rains that has come in, and that has kind of boosted the confidence, and a lot of people are starting to invest in the auto sector, especially the two-wheeler sector, and that is what is seeing some traction in the two-wheeler sector. So I would simply say that it is a great time, again not a great time to invest in the two-wheeler sector, I would say, because for a long term I don't see a great future for two-wheeler sector, but then some portion which is already invested is already in some good decent return as what I'm seeing right now. Why, if you ask me, our two-wheeler sector, how many of us actually today aspire to buy a two-wheeler, right? Aspiring bikes are what, maybe Royal Enfield is to some extent some aspiration, but otherwise a Pulsar or a Apache is not a aspirational bike today to many, and most of them are shifting to cars. So with all that, I don't see a great future for India unless probably some aspirational level biking comes across. But then as of now, it of course could be more of a rural demand that is actually giving up. So I would say over a period of time, as the country develops, two-wheeler demand will come down, and that is why I'm not heavily invested in the two-wheeler sector. But of course, I've got a good investment in passive auto sector. Like of course, when we talk about passive auto sector, the first stock that comes to mind is of course Sonacom. Sonacom Star has been doing really well of late and has been kind of recovering from all those losses that it had fallen from. In fact, I am expecting about at least 10 to 15% rise from in Sonacom from here, and only if it is more than that, don't be surprised. So similarly, I am passively invested in few other stocks, auto stocks like Minda, and we also have other Sansera. So these are all few stocks which, because these are all stocks that kind of supply to almost every auto industry. That could be the cars, that could be the two-wheeler, and is whenever the auto industry goes up, this will actually go up. So it will have lesser effect of whether two-wheeler sales comes down or or four-wheeler sales goes up. So that impact will be slightly lesser. So that is why I'm more focused there. In the two-wheeler section, of course, I've got a few stocks in portfolio. That is TVS Motors. I also have iShare with me. So of course, Royal Enfield still has that aspirational value. So I continue to have iShare Motors with me. So that is about the two-wheeler sector. Okay, let's move on. So these are good results, I would say. And one stock that we will have a concern with is, of course, Manappuram, because the ED has actually gone ahead with some investigation at Manappuram offices in Kerala, and have seized some property of Mr. Nandakumar, who is MD of the Manappuram Group. So that can be a bad news. Manappuram is a very strong company, and especially with gold prices going up, they have huge exposure to gold loans, and that could be actually profitable to them, because a lot of people who are unable to pay loans, what happens is, since they have gold deposited with us, with them, these gold, with the prices going up, the company's value actually goes up. That's exactly why we had expected Manappuram to do well, and we've added it, but then this is an unexpected scenario. So if I see a fall, probably I might think of exiting for now at this point of time, because whenever there's a bad news inside a stock, I prefer to kind of stay away from the stock. Now that is not a generic thing, but it is my personal view. So many times I have seen that starting off with one bad news actually can go into a lot of continuous next follow-ups of bad news, and that can actually spoil our investment. So I would be looking at an exit into Manappuram today. I'm not does not mean that the company is bad. The company is strong. It's got real good power, but we don't know how deep this thing can go to. So I would rather exit and wait and watch, and once things are settled, probably I can re-enter. So that is something that I would be doing today, another action. Now, apart from that, if you look at very important thing, what happened after Indian market closed is something important, because if the after Indian markets closed, European markets were kind of flat, but Indian markets were in huge green. But if you look at what happened in the US, that is astonishing. I would not say astonishing as such because a lot of things were kind of expected in the US. PacWest Bank, again, another mid-sized bank. There are news reports of it collapsing. And yesterday, after the market hours, the US market, of course, the PacWest Bank was down by more than 50%. But then during the market hours also, overall, the banking sector in the US was really weak, and that led to a fall in the US market. So yesterday, we could see the US markets all closing in the red. Dow was down by more than 1%. Nasdaq also was decently down. But then, of course, one silver lining there was the results that came in from Apple after the markets closed. Yes, so after the US markets closed, Apple results came in, and they have come in better than expectations, and thanks to better sales of Apple iPhones. So that has kind of given us support. So US futures are actually trading higher, but however, US markets closed lower. Now, since US futures are going up, we could see SGX Nifty also recovering, because morning when I woke up, SGX Nifty was actually indicating a gap down opening, but over a period of time, it is kind of slightly recovered as Dow futures have recovered. Asian markets are kind of mixed and mostly positive. But if you look at Indian market has a benefit here, because with this bank falling again in the US, the crude oil prices have actually gone down. So that is again a big positive for Indian market, and naturally Indian market is right now on its own league of movement, which of course is not great, because I would say if at all a market keeps rising right now, at some point of time when US market, since the US markets or global markets are not supporting, there are chances of a big correction that can come in. So that also can be on the cards. So don't expect the market to keep rallying like this. But of course, Indian banks are much stronger in situation. So right now, if you look at US, the corporate results have actually been good. Microsoft was good, Meta was good, Google was good. Now Apple also has come out good. So overall, the corporate results were good. But it is just the banking sector in the US which is kind of pulling down the market. So if the US markets don't recover, that would definitely impact, if not today, tomorrow, or in the upcoming days. It is definitely going to impact, and the Indian market can see a big fall if just keeps going up. Right now, if you look at the reason for the Indian market going up, it is nothing but just the FII buying. So that could see some correction. So that's exactly why I feel if you are sitting with some good profit in your portfolio, you should be considering booking some partial profits here and there, so that you could have some enough cash when market falls. You could use them to buy new stocks or enter into new categories. So that is something which will be on the cards. So today I'm looking at booking some profits on some stocks. Let me see how and when and what. So of course I will be announcing that in the community. And if you're not a part of the community yet, it's high time you join the community, because it's an absolutely free community. All you need to do is become a part of, open a Demat account with us, and you get lifetime access to the community free of cost. So that's about that. Okay, yeah, some marketing there. Okay, fine. Let's go back to market. So what happened after that? So SGX 50 was indicating slightly a big gap down, about 80 to 100 points. But then it is looking like it's recovering now. But however, if you look at last few days, SGX 50 has not been honored at all in the Indian market opening. So yesterday also it was showing almost a gap down, but then it actually opened flat. So today also we might see with so much bullishness already in the market, and results also good. I would say we might open flat to slightly positive, and then after market opens, what happens is very important. But then if you look at the week, the market has had a good rally. So I am expecting the market to kind of consolidate slightly today, and probably end of the day have some fall. That is needed. That would be a good one to have some fall. Otherwise, if in between, if there are no small falls, then the big, then if the rally continues without small falls, then there could be a very big fall, which could be like heavy on hard. So it is important that the market have some decent correction before the next leg of rally. If that does not happen, then I would be actually a little more cautious on the market conditions. So that's about it for now. I think we've covered it all. I'm really happy about HDFC Twins. So if you are having HDFC stock in your portfolio and happy with the returns, do comment below. I would like to hear that. So that's it for now. This is Srikanth. I'm signing out. But before we leave, do press the like button if you love the content that we share, and do share the podcast with your friends and relatives to help them learn and invest together with us. And if you have still not subscribed to our channel, do subscribe, because that would of course motivate us. Goodbye. Have a great weekend. And MPA members, let us catch up on Sunday for our regular weekly meeting. Goodbye.